In June this year, rich Kenyans and companies were depositing daily an average of $2.1 billion. Now, this is about 8 trillion Uganda shillings. Put this in context. Uganda's annual budget is 48 trillion shillings. Now, some analysts have been blaming this on the fact that many were trying to hedge themselves against the uncertainty that elections sometimes bring. But then also the fact that the shilling has been losing ground against the dollar. Of course, like the Ugandan shilling, the Kenyan shilling has also lost good ground against the dollar, and some we are looking to cash in on that. It is Money and Markets, and I'm Charles Boyd, your host. Welcome to the show. It's a tough economic run for literally everyone, especially those that sit within the business subsector. And experts are trying to point in different areas which particular space can actually rejuvenate this economy. And today, we're trying to explore that in the boardroom.
The government of Uganda has done several initiatives over the course of years to prepare for this situation and this environment that we're in. Beginning with the National Oil and Gas Policy of 2008, which recognized that part of the sustainable development of this oil and gas industry required the participation of local goods and services. This National Oil and Gas Policy has then trickled into the legal framework through the Upstream Act and Midstream Act, out of which the oil and gas sector governance was created, with the Ministry of Energy responsible for policy and investor promotion and licensing, the Petroleum Authority of Uganda responsible for regulation and compliance, the Uganda National Oil Company, where we are sitting today, which is responsible for all the commercial interests that the state owns in the oil and gas industry, and the Ministry of Finance responsible for the fiscal regime. Sitting underneath that is a national content policy that ring fences 16 sectors, 16 goods and services in which Ugandans have been encouraged to participate. These sectors range from transportation to clearing and forwarding, catering, hospitality, ICT, security, construction, etc. And so a lot of policy design has gone into creating room for local goods and services. This national content framework is all the way from the highly skilled sector down to the skilled and semi-skilled sector, basic sector, within which we expect that approximately 37 to 40% of this investment that I've discussed, 15 billion, will remain in country and will be invested through local goods and services. So we at UNOC consider ourselves to be at the front line of ensuring that national content remains front and center in this oil and gas industry. Through the seat we have in these business interests, we ensure that all the contracts give consideration for national content, and where necessary, give consideration first to local goods and services. And even where possible, that contracts are unbundled to ensure maximum participation. So therefore, we consider ourselves the first eyes in terms of ensuring that this investment goes to local content. Of course, we do this in conjunction with all the other institutions in the oil and gas sector governance. This includes our sister institution, the Petroleum Authority of Uganda, as well as our ministries and shareholders, the Ministry of Energy and the Ministry of Finance. So the government of Uganda has made provision for such companies. The first advice that we would give such companies is to please register with the National Supplier Database. This is a database through which all local goods and services can register and therefore express their interest in participating in the oil and gas sector. It allows for a situation where oil companies who are coming into Uganda can start to look and understand the availability of goods and services in Uganda. This supplier database is hosted by our sister institution, the Petroleum Authority of Uganda, and is alongside another database called the National Oil and Gas Talent Register, also hosted by the Petroleum Authority of Uganda. Through these databases, it is important for Ugandans to make themselves available and to register their interest in participating in the oil and gas sector. This is the advice that we would give. My last word is to continue to encourage Ugandans to please participate in this industry. Your goods and services are necessary for the development of this industry. This is an opportunity for companies and individuals to continue to be part of the development of our country. And so therefore we encourage Ugandans to continue to take interest in the industry and to continue to support the work that all the players are doing in this industry to move our country to middle income status.
For quite some time, the traditional banking institutions suffered with growing the penetration of finance services within the market. Of course, until the fintech revolution. Now, today the central bank is appreciating that and is trying to see more ways on how this can help enhance the inclusion of all within the formal financial sector realm. The central bank and Minister of Finance are doubling effort at driving the financial inclusion agenda with eyes keenly fixed on reducing the portion of Ugandans outside the money economy. To the central bank's deputy governor, more will be achieved through embracing digital platforms as enablers.
It has been said that through the fourth industrial revolution, what we call Industry 4.0, is not only about technology-driven change, but also an opportunity to help everyone, including leaders, policymakers, and people from all income groups and nations, to harness converging technologies to create an inclusive and human-centered future.
At the core of these efforts, the central bank insists that financial literacy remains crucial, as this will ensure that the public, right from the bottom of the pyramid, demands the right financial services for the right purpose.
How can we leverage advancements in digitalization to kindle the demand for financial services by people at the very bottom of the pyramid, and thus increase access to and usage of quality and affordable financial products?
70% of Ugandans work within the informal sector, with the youth and women overrepresented. To Minister of Finance, this is a key segment for financial inclusion, and several government programs have targeted this group with results.
The financial inclusion for the poor, too, has shown some tremendous growth. In 2011, just 10% of the poor had access to an account. This figure has now grown to 50%. For example, Profila, this is the project for financial inclusion in rural areas, has been promoting rural financial service provision in Uganda. By 30th of June this year, Profila had supported the establishment of 15,000 community savings and credit groups, with women making up to 76% of the beneficiaries.
Leveraging on the digital revolution, government is now pushing for more integrated finance sector that enables finance service provision convenience, with agent banking today cited as one of the major milestones attained, as this has taken banking services outside the banking halls to the man on the streets. We'll now take a very short commercial break. Money and Markets continues after this break.